Hello everyone, welcome to the Dividend Enjoyer channel. Today we are going to be doing a Carnival Cruise Line stock analysis, or ticker symbol CCL. Carnival Corp is currently trading at $25.44 USD. It has a 52-week stock low of 13.78 and a 52-week high of $27.16. Year to date, the stock is up 47.14%. The PE ratio of the stock as of recording is 22.65, and the market cap of the stock as of recording is $32.59 billion. Sales growth increased 77.46% year over year for fiscal year 2023. Interest expense for 2023 was $2.1 billion, a 26.74% growth year over year. Net income for last year was negative $74 million, which was a lot better than the year prior, and analysts are generally bullish on the stock, with price targets ranging from $17.27 to $35. There's only one analyst currently that has a sell rating on the stock. There are 6 analysts that have a hold rating on the stock, 4 that are overweight, and 18 that are recommending a buy rating on the stock. The business is difficult. High competition from other companies with deep pockets like Disney make it really difficult to compete because they just throw more money into it from something else, and they're not entirely exposed to just the Carnival part of the business because this is a cyclical business, obviously. Initial capital to get started and maintain / repair your ships also makes it more difficult. This is just a capital eating business. Your chance of potential lawsuits for something completely out of your control is pretty high as well. That's something to think about if you're thinking about investing. Again, cyclical demand makes it difficult for year-round revenue. Cruise lines are subject to a wide range of international regulations regarding safety, labor, taxation, and environmental compliance. Adhering to these regulations adds complexity and cost. So yeah, it's difficult to operate in a business where you're going all around the world and you're having different types of currency. Something we're going to talk about later is their exposure to different currencies other than the US dollar that also makes it so that they could lose or gain money for something out of their control. Additionally, the cruise industry often relies heavily on debt to finance its expensive ships. Carnival's financial position was definitely worsened during the COVID-19 pandemic, leading to high levels of debt that must be serviced even in downturns. Yeah, so the business got absolutely crushed during COVID-19. And I think potential investors looking at it are looking at if it can rebound quicker. I think this stock more likely will be in better position in the next 10 years than it is now. But I don't know if it's better. I don't think it's better to buy this than something that's more monopolistic in a better industry, because this is a really bad industry in my opinion. But the COVID-19 pandemic significantly disrupted the cruise industry, leading to prolonged shutdowns, canceled trips, and reduced consumer confidence. While recovery is underway, regaining full pre-pandemic operational capacity and profitability remains challenging. These factors collectively make Carnival's business model capital-intensive, sensitive to external factors, and reliant on strong economic conditions and consumer confidence. CCL has actually suspended its dividends since 2020 and has not brought it back. I suspect their high debt and the high rates that we're currently experiencing are the reason for this, and just the fact that it's so difficult for them to operate after COVID. I mean, it's obviously because of COVID that they suspended the dividend. Because they just didn't have no one wanted to go for a cruise during that time. And it was like a rare, I think, anomaly, once in a lifetime event. But Carnival Corporation and PLC, they're the world's largest cruise operator, actually, commanding a significant share of the global cruise market. As of the third quarter of 2024, Carnival held approximately 40.89% of the market based on total revenue, outperforming competitors such as Royal Caribbean Cruises, Ltd. 26.82% they had, and Norwegian Cruise Lines holding 15.63% of the market. And I really like that. I would like Carnival a lot more if they were at 50, because then I feel like they'd be almost in an oligopoly. Although this market is kind of an oligopoly, so I guess I can kind of retract my statement about it, not being a monopoly. But there is a lot of competition here. It's just impossible for new people to come in. And I looked. This excerpt from the bottom is actually from their 10K, and they literally even say in it, "We do not expect to pay dividends on Carnival Corporation, common stock, and Carnival PLC ordinary shares for at least the next few years." So if you're looking for a dividend, you're probably not going to get it here. And, for Dividend Enjoyer channel, that's going to get a thumbs down. And again, like I said before, fluctuations in foreign currency exchange rates may adversely impact our financial results. This is from the 10K as well, which is an annual report they have to file every year with all their risks and just everything that investors could ask is on the 10K. I think I'm going to start reading 10Ks, but I'll read this for now. We earn revenues, pay expenses, purchase and own assets, and incur liabilities in currencies other than the US dollars. Additionally, our shipbuilding contracts are typically denominated in euros. Movements in foreign currency exchange rates, which have recently been more volatile, will affect our financial results. So if the US dollar strengthens, it's actually really bad for Carnival, because they're having to convert their euros into US dollars for a lower exchange rate. Or if the euro weakens, that's really bad for Carnival as well. And there's just so many things that affect this business completely out of their control that I almost feel like if you're investing in Carnival, you're more gambling than actually investing. Just my personal kind of feel for the stock is there's a lot of factors at play here, and you're kind of betting that most of them will go your way. Some financial risk factors. We require a significant amount of cash to service our debt and sustain our operations. Our ability to generate cash depends on many factors, including those beyond our control, and we may not be able to generate cash required to service our debt and sustain our operations. Our ability to meet our debt service obligations, refinance our debt, or sustain our business needs and operations depends on our future operating and financial performance and our ability to generate cash. So essentially they're saying if they can't make cash for a quarter, or they aren't smart about saving enough cash to pay off their liabilities, they will go out of business, and it will not be good. Or they'll have to sell assets, which is going to be bad because it'll lower their future cash flows. It's just not a good look, and the rates are not helping them. They need lower rates to be able to operate well. They need to pay off more of this debt before I think anyone should touch this company. But I don't know. Maybe I'm wrong too. That's the other thing. Let me know in the comments. And I thought this was interesting because they had to put it, this is their performance. So the green is Carnival. If you put $100 in 2018, you would now have in 2023 $26. If you did the same thing in the S&P, you'd have 180. The FTSE 100 is 131. Interesting, the Dow Jones Recreational Index also, well, that makes sense because of COVID though. So I get it. But yeah, they did a lot. They did worse even than the Dow Jones Recreational Index, which is very surprising actually. And now, I'm going to give some of my closing thoughts. This is all my opinion and just entertainment. It's not financial advice. However, don't buy this stock, please. Please just don't. You might make money, but you might lose a lot of money too. I really think you're taking on a ton of risk for not enough reward to justify it. There's no dividend either, so they're already having to be like sparse with every single penny. If anything bad happens to one of these ships that's unexpected and like a major repair or if anything happens where they get sued, if there's a big storm, if there's a season where people just decide they don't want to go on cruises, if something happens to their brand that causes people to not like Carnival, there's just so many things that make this stock terrible. And I don't want you guys to have to deal with that headache. I want you guys to make good financial decisions that are going to make you more money. And I want you guys to have less risk and more potential upside. Because even if they got rid of all the debt and they were just collecting money, I mean, it'd be a way better business. Um, if you could just snap your fingers and lose all the debt. But I still don't think they would have the kind of growth as like something like a Salesforce, or be able to have such a monopolistic position because of regulations like a waste management or an energy transfer, or grow the business through really high margin stuff like Amazon's cloud or Microsoft's cloud, or Apple. I just don't think this is an excellent business, and I don't think they're in an excellent spot balance sheet wise, and I kind of think they're just kind of fighting back to get where they used to be. And I just wouldn't want to own this stock. I think it could double. I think it could do amazing things, but I don't want to take on that risk because it could also do amazingly bad things and lose you all your money if there's one bad season. So those are my thoughts. Let me know what you guys think down below. Please subscribe if you stuck around this long. And check out some of the other stock analysis videos. I got